and welcome to today's segment of The Power of Money. I'm your host, Michelle Graves, affectionately known throughout the United States for the last 36 years as the Money Lady. And I'm just so happy and delighted to be a part of your world for the next hour, as I have been over the years trying to bring you information and people and resources so that you can begin to make sound financial decisions for yourself and for your families. Because truthfully, when it's all said and done, the only thing that really matters is your family and making sure that the labor that you have put in has been valuable, that the stewardship that you've exercised in your family's lives is memorable, and that you have a strong foundation. So today, for the next hour, just have a seat, because this is an educational program today. I'm going to be talking to you about the power of banking. And I'm going to just tell you that after being in this field called banking since my 20s, and of course I'm in my 60s now, I have a lot to say and to see. So I'm going to give you a little bit of background about my history, just so that you'll get a perspective as to how I know so much about this tricky industry. And I say tricky because most people haven't a clue. And as we move more into technology and into systems, the world of banking and how you do your business when it comes to your money is going to be more and more preeminent. By way of background, I am an economist. I came into the field of banking in my youth and worked for some very, very well-established corporations, U.S.-based, Lincoln National, where I was assistant investment director and ultimately headed up the banking division, which was over $500 million in investable assets. That was in the 70s. Yeah, stop trying to calculate my age. It's going to get you in trouble. But had the privilege of specializing in mergers and acquisitions as a very young woman, only African American at that time, female, essentially financing banks to buy other banks during the heyday of bank mergers and acquisitions globally. And Lincoln National was preeminent in that arena, providing what we call debenture or debt financing. So I specialized in buying banks for a living. As I tell people, no, I didn't work for a bank, I bought banks. Moved on into the internal side of banking, where I worked for a large bank to prepare it for acquisition from another one of my client banks, and got to learn the inner mechanics of banks as their strategic planner. And believe me, buying banks and working inside of a bank were two different perspectives. But because of both of those levels of expertise, I was able to get a very rounded view of banking and why it is the banking industry that moves the world. Trust me, if you're not doing money, you're not making it happen. And so what is a bank? Well, a bank is simply a financial intermediary, meaning a connector, where they lend other people's money out and make money on that money. That's banking, period. Simple as that. They take money that they hold as deposits and recycle that money into the marketplace in the form of loans. And the difference known as interest, meaning what they charge you to get their money, is how they, for the most part, make their money. Do banks own property? Well, if you want to call owning a branch owning something, maybe. But they make money from money. Isn't that amazing? That's what they do. They pay you 1.0% interest, lend it out at 9 to 26% if you got a credit card, you got bad credit. And so you say, but is that fair? And I'm like, well, don't go there to borrow, because that's what they do. So today we're going to be talking about the world of banking. If we could have that first screen up. And on that subject of the power of banking, let's move on to the next screen, which is what is banking comprised of? If we could move. The components of banking. We have, banks are in 4 key areas. We can take that down. Personal banking, which is what most people are familiar with. That's your checking account, your savings account, your certificate of deposit. Consumer lending, banks loan for cars. They loan money for mortgages. They loan money for everything just about that's legal and legitimate as a part of business. That is personal banking, also known as consumer lending. Banks are also commercial. Business banking. Businesses depend upon banks as their blood, their life source for getting lines of credit to finance them between their getting payments from their credit from the people they do business with. They need them on international transactions known as letters of credit internationally. They use banks to finance their inventory, to finance their buildings, to finance their acquisitions a lot of times. That's commercial banking. Some of the bigger banks, well-known banks, PNC, Chase, Citicorp, JP Morgan, all of these big boys are commercial banks. That really is their niche. They do consumer lending, and what bank's not going to go for money? It's money. They'll take your money, but the thrust of their business is going to be servicing the business community. Banks also provide merchant services. They process payments when you're paying your bills, writing those checks, making payments by way of debit cards or credit cards, however you do payments. Banks have a very sophisticated, global, I might add, processing system for handling what we call merchant services. Very sophisticated and getting more so. They also have an area in treasury management where they do asset protection and services. Again, this is for businesses primarily. And finally, many banks, particularly mega banks, the big boys, have wealth management and private banking where they service the wealthy. They have trust departments with trust officers who handle guardianship, probate matters, assets of widows, widowers, wealthy people who don't want to do it. They have their own in-house capacity, and they make in revenues billions of dollars, billions, handling the affairs of the wealthy. Talk to each other all over the world. This is one of the things when early on in my career, when I realized that bankers really do know more of your business than you'd like for them to know, and there's nothing you can do about it because you've given them access to your life. They know when you're running bad checks. They know what your balances are. They know exactly what you got. So when people say to me, well, I don't want you knowing my business, this goes back years ago. And I told them, but you have to understand that you gave our industry consent to know your business. And so we do. We don't judge you based upon your bad check habits. We just charge you. How you like that? So that's, and for today's show, I'm not focusing on any of the other aspects of banking. I'm focusing on personal banking, consumer banking, things that impact you and I as citizens of the United States. And for the record, the United States has the largest number of banks. In Europe and Asia, you do not have all these banks. And these banks are in overseas are typically controlled by very wealthy families and have been. And I mean, in Germany, you know, a 100-year-old mortgage, I mean, the bank's been making loans to the family for years. It's not an egalitarian system overseas. America has made banking accessible to everyone, which just simply means that they get to rob everybody. They don't have just a group of people to take money from. They have everybody. So the American banking system is quite powerful. It finances and propels the American way of doing business in a capitalist society where profit is preeminent. So we're going to be talking about personal banking. And let's go to the next screen if you don't mind, and let's talk about the rules. Let's talk about the rules. Okay, yes, thank you. The rules. First thing, let me just say right up, there is no free ride in the world of banking. Banks are not nonprofits. Banks are in business only to make profit off of the money they lend you and the fees they charge you for using their services. They are in the business to lend money. Although in the last couple of years I've been wondering, because they haven't been lending money because they feel it's just too risky, and given interest rates being so low, they just do business with each other. Yeah, banks do business with each other every day, all day. And because, again, that's what they're in the business of doing. They borrow from each other, they lend to each other, and they make money from each other. But their primary mission is to lend money, okay? And that's what they do. And they make profit based upon the interest that they charge for lending you money. Let's clear up a misconception, because many people are frustrated because they go to the bank, starting a business, go to the bank turns them down. So why did you turn me down? I need the money. I don't have any money. And I say, up! Mistake number one. You never go to the bank when you need money, because that says to the bank, why don't you have any money? Banks love to lend money to people that don't need money. It's a weird thing. But they don't like to take risks. So if you don't have money, they're going to be asking, what do you have that we can take or hold till we get our money back? Because they don't like to take risks. So if you're an entrepreneur, as I share with people, and God knows I started my company in 1980. That's a long time. And my first banker was my dad. He loaned me $5,000. Grateful that he did, because I probably wouldn't have gotten a dime from a bank. Why? Because they don't take risk, and a startup company is a risk. They make their lending decisions for you as a consumer based upon trust. Because remember, they're lending money that will be repaid at a future time. And a lot of things happen that keep people from paying their loans. So I tell people, you know, if a family member loans you money and you don't pay them back, they may be mad, but they'll forgive you. The banking industry, they're not going to forgive you. In fact, they will destroy your credit, they'll destroy your good name, and all because of the issue of trust. Remember, banks do not like to take risks, because their expectation is that when they lend you the money, it is a signed agreement. There's no verbal handshake. You all know the rules. When you go to buy a car, you sign a ton of documents, including your interest rate disclosure, terms for them taking the car back. If you don't make payments after 60 days, they're going to take your car. Because you signed a document saying, I am a person of honor and I will honor the terms of this contract, or else I'm going to buy this car cash. Because if it's cash, it's me. It's on me. So, again, this is how they work. This is part of the rules. Interest, the interest rate that you are charged is the cost of you borrowing the money. Now, interest rates vary all over the place depending upon the level of risk that the bank thinks that they will have in the transaction. Let me give you a case in point. You have filed bankruptcy. A lot of people do, for whatever reasons. Bank sees it, it means you stuck a lot of creditors. You didn't pay them. And remember, bankers are, it's like one big money family. They figure, oh, you did it to him, you may do it to me. Therefore, I'm not going to give you my best rate. because I don't trust you. And so you may wind up paying a significantly higher rate than what you see advertised on television, those teaser rates, because they don't feel that you're a good risk. Now, things can change over time, and things do change as you pay on time and you develop trust and you show them that I pay on time, I'm not a problem, you can trust me. And then they'll reconsider at a future time if you ask them. Now, if you don't ever ask them, don't expect them to reconsider anything, because their position is you entered into a contract, you paid per the terms of the contract, and we're not changing anything unless we see that it merits a change. So, again, interest is the cost of you borrowing money. And I've said this over the years, and God knows I don't want to sound callous, because like it or not, banking runs this world. Did you not know that when Germany was at war globally, who do you think was financing all that stuff? You don't want me to tell you who was financing that stuff, because it'll really kind of make you like, ooh, this is really kind of creepy. The banks were in bed with all sides. They didn't have preferences. They financed everybody. They just took collateral. They took stuff, took art, jewelry, took what Germany had to put up, and they relocated to Great Britain so that if stuff went crazy, the bank wasn't at risk. This group is so amazing. And I have to say it because God knows I know them. Okay, and I was a part of that system for so long that I just know how they look at stuff. Okay, so the whole thing is, why not make money? We're not at war. We're just financing this mess. They still financing stuff big time. Credit is easy. Again, what is credit? Credit is what a bank is willing to lend you under certain stipulations that you will repay as agreed. If you have a history of not paying people, or you don't have a history at all, they don't know anything about you, they're not necessarily willing to take the risk. But when your credit is good, credit is easy. And this is where so many people mess up. When your credit is good, credit is easy. You can get a pile of credit cards, and they'll keep fishing you credit cards until they look at how many credit cards you've used, and then, too much credit, and you will find that you can't get credit from anybody because you're considered a high risk. Why? Because if you use all that credit based upon your income and the information they have, they're going to say there's a high probability of default, that you're going to stick somebody in our family. Remember, they're family, okay? Check cashing companies, title loan companies, you know, your car title, that's big in Ohio now. Secured credit cards, you know, where you put money as collateral and they will give you your money back to you to use on a credit card. Isn't that ingenious? You give them your money, they give it back to you and charge you interest on your money. Who came up with that idea? But that's big, big business. Told you, that group's something. And high rate lenders for mortgages, which were really big in the booming days of subprime. A lot of you got involved with those scandalous, predatory, bite you in the butt lenders, and you paid for it because the document you signed said that they could accelerate the loan, change the interest rate, throw you under the bus, crash your house on your head, and tell you, have a nice day. So these lenders, the ones I just named, check cashing companies, God forbid, title companies, title car loan companies, secure credit cards, high rate lenders, are in business to serve those people who the bank doesn't want. Although the majority of these companies have affiliations or are either owned by a bank. Is that something? Because remember, banks are in the business of lending money. And all these companies have to clear through a bank. When they go to make their deposits, They're not making it to the title loan bank. They're making it to a bank. And so there we are. But the bank's not willing to deal with these kind of high-risk individuals because they do not feel that they are trustworthy. They do not feel that their profile meets their particular perspective. And I say this because now banks, I just heard an ad for a bank that says that you don't have to have a checking account. You can just plop your money there, and when you need to cash stuff, you can go to them. It's amazing. And they charge you a $5 monthly fee for holding your money. I mean, it just gets better and better. Guys, you got it. So, let's go to the next slide. Show me the money. How do they make their money anyway? Well, they make their money by charging your monthly fee for having a bank account. And typically, if you keep your balances low, you're going to pay a sizable monthly fee, okay? Because their position is, well, we're not making any money if you're not keeping any money here. Although that is highly debatable, because we all know that when you aggregate millions of people keeping their little deposits at the bank is definitely making money, because remember, they're lending it out, even if it's overnight to another bank. They have negotiable item fees, which is different things that you may have going on in your account, wiring funds, doing things that overdraft fees. Oh my God, overdraft fees. Pure income. Why? Because the Fed does not charge the bank what the bank charges you. The Fed knows when a check comes into a bank and the bank aggregates to go through the clearinghouse, which is the Federal Reserve Bank, which is a private corporation. Okay? That is a clearinghouse. They know immediately if the check's good or not. And those fees, if I last recall, were under $1. It's just so negligible. It may be even much less than that. When I was actively in banking, it was 15 cents. Well, if you get whopped $1, and you can charge a client $26 per day, because the longer the check is not made good, the fee just continues to accumulate. Then you wind up owing the bank $300 for $1 fee. Can you imagine the staggering sums of money they make just on overdraft? But it's perfectly legitimate, because your check was not good, and it can create problems, because if you don't make good, let me tell you this, if you don't make good on those overdraft fees, do you know what the banks do? They turn you over to collection, okay, which is their own agency. Isn't that smart? And then they blacklist you so that you cannot open up a banking account anywhere in the United States of America under your Social Security number, which they all have, because that's a requirement when you open up your bank account. So they turn you over to collections because you wrote that bad check and you didn't have enough money to settle up on overdraft fees, which they very seldom waiver. And then they say, you can't open up a bank account because we've got you on a watch list. So you want to know why check cashing companies have become so huge? Can you imagine all the millions of people that have overdraft fees that are more than their monthly rent? And they're like, oh my God, I can't do business like this. And they're like, not my problem. Work it out. We'll take the right hand of your firstborn child as collateral. That'll be a good start. Have a nice day. Anyway, I'm being sarcastic, but I'm telling you the truth when you really look at how things work. And this is why I tell consumers, I'm going to talk to you today about banking, because you need help. You need to understand how this works so that you can stop being victimized. Because actually, you may say that it's immoral, but I will say to you, and what else do you want to talk about? They make money on ATM fees. Yeah, if you use an ATM machine that is not a part of your bank's network, there's a fee. And many banks in the olden days charged a fee anytime you used an ATM, period. And young people love ATMs, and a lot of older people too, because it's convenient. But remember, banks are in business to make money. And if you're enjoying the convenience of an ATM, then be prepared to pay fees. They pay service, charge you for service fees, and any daggone thing else that they think they can legitimately and legally charge. They charge. If you take cash advance off your credit card, there's a charge for that. Higher interest rate and a charge for doing that. They charge if you are constantly a bad account, and they will close you out. They charge if you don't keep enough in the account. If you're just struggling, they'll tell you, maybe this is not the place for you to do business. Okay? At which point I tell people all the time, whatever happened to your local credit union? What's wrong with that? No, they're not a bank. They have to do business with the bank. But they're certainly a lot more compassionate because it is essentially a member-owned organization. And again, if you are not a client that a bank can make money on, then you need to take advantage of your credit union. They're all over the place, and they do a lot of good service, and they look like a bank, but they are not a bank. All right, let's be clear. They have to clear their checks through the banks. Yeah, they do. They have to clear those checks you're writing on credit unions, fine, well and good. But that credit union has to clear those checks through a bank, okay? Now let's really talk about where the big money is. And fees are big money. Don't get me wrong. You can make a ton of money on fees. And they're making a ton of money on fees. And they're going to continue to make a ton of money on fees because people actually don't complain to them about their fees. Oh, they don't like paying the overdraft charge. But in the back of their mind, they're like, I shouldn't have wrote the bad check. And the bank's like, exactly. So bend over and take it, okay? A spread. The spread is the difference between what they're paying you on your certificate of deposit, on your savings account, and even on idle funds on your checking account, and what they're earning by loaning it out for credit cards, business loans, auto loans, and a multitude of loans, because you know they lend money. That's called the spread. The bigger the spread, the higher the profit. And so do banks love credit cards? Well, hecky, yeah, they love credit cards. Who would not love a credit card when you can lend money out at that interest rate for stuff? And when I say stuff, what do American people do with their credit cards? They buy stuff. And what I share with people as a financial person is that dress you couldn't, listen here, listen up ladies, I'm getting ready to make you mad. You're going to want to push the button, but don't push the button because Michelle's talking to you truth. When you go out and you purchase that die-for dress that you really can't afford, but you just have to have it because you drank the Kool-Aid, and you take your little credit card and you pay, let's just say 20% for that dress that's only worth $10. Because if it was made in China, that dress is not worth that much. Trust me, the Chinese do not spend money on anything, not even themselves. So you pay $200 for a $10 dress, and then you pay 20% interest on that dress. What is that called? Is that called insanity? I think so. So don't be upset because the bank wants their money and the dress turned out not to have been a good deal at all. I can't emphasize to women especially, because at this time in history, we are the largest group in terms of purchasing power. Now, don't get me wrong. Men buy stuff too. They buy fishing stuff. They buy cars. They buy suits and shoes. They buy big ticket items. But men do not use credit cards like they are looking at monthly money's coming in. Men don't do that. They just do installment loans and pay the bank more over time. But the reality is that if women could stop spending money that they don't have to buy stuff that they don't need, they will find that over their lifetime they will have accumulated significant income resources by their savings. Because every time you commit to participating in the bank's spread game, right, where he loaned the money to you at 20%, and the stuff isn't worth anything, in the end, where are you? Now, there are some exceptions. Like I tell women, if you're going to buy a once-in-a-lifetime dress, you make sure you're going to wear it a lot, because at 20%, it's costing you big time. And finally, and this is so important, in addition to all these other things, they look at your credit history, which, remember, is a function of trust. So if you're trustworthy and you pay your bills and you're honorable, you should have a good credit report. If you don't, or life just whacks you, a little bit different. Let's go to the next slide. Under credit red flags. Let me tell you about the importance of credit. Credit in America is more powerful than a good marriage or bad marriage. Credit will run your life, and credit will ruin your life, particularly when you're young and dumb, because you don't know enough to know what you don't know. So you say, I come out of college, you got all these bills, all this debt. So first thing you want to do is buy a car. And you have good credit because you don't have much credit. You're college, you got a job. So you go out and buy yourself a car. You get a loan. And then you want stuff for the car. That's another credit card transaction. You want to put rims on the car. You want to do this to the car. You want to, as another credit card. Then you want to do something else. That's another credit. And before you look up, you've got all this credit debt. And you don't have enough monthly money to cover all this stuff. So what do? So you start robbing from Peter to pay Paul. And then you find yourself in a bad situation. You lose your job, or your department was eliminated, but you still got this installment loan, and you got all this credit card debt, and the bank does not care why you can't pay them. This is the insidious nature of credit. They don't care, because they will tell you, we made the loan to you in good faith, and we expect you to pay us back. So if that means getting a job at Walmart, being a greeter, if that means loading up trucks at night, if that means, taking in kids during the day, you do what you need, eating hot dogs, do what you need to do, because we loaned you this money in good faith. Because if you do not pay us, you're going to descend into an experience known as, oh my God, the truck is on my head. What are some of the credit red flags? Late payments. When you get your notification to pay a bill, it's right on the contract. It has to be received on or before. Now, people that do mortgages, they play this out. Well, I'm given a grace period, and I want to fall out laughing, which is, you actually believe that banks are God. The only person that gives you grace is God. God, a bank does not give you grace. You pay per the terms of the agreement, on or before the due date. So if you have electronic banking, you can debit and boom. You're mailing, you better mail it when the bill comes in, because the mail is just kind of, different today. High balances on credit cards. If you're maxing out on all your credit cards, that's a red flag. Everybody knows that when you're overextended, you're credit charging everybody. Now, if you're self-employed and your money comes in lumps, you may run up high balances and then pay them all down. That makes sense. But if you're a worker bee out here every day trudging like most people, and you've got overextended credit and you're trying to figure out which card to pay, Oh, you know, we've been in situations at the store where you pull out 5 cards and they're all maxed, and you're like, oh my God. And I'm like, yeah, you're kind of scary. Collection accounts. Red flag. If account goes to collection, that means that you have violated the terms of the agreement. And you didn't work anything out. And now they have to turn it over to a collection agency. If they do it outside, the account may be sold, meaning the collection agency now has to collect, and they're more than happy to call you 24/7. Forget what the law says. They're going to call you. They're going to harass you. And I've had people say to me, just in private, why do they call me all the time? I said, I promise you, they will not call you when you pay them off. They're not going to call you once you pay them. They really won't. But as long as you owe them, it's business. They're going to be collecting on you. So that's a red flag. Too many credit inquiries when you're trying to get credit card all over the place. It all shows up on your credit reports. Bankruptcy. Oh, that's a bad one. That's a big one. Bankruptcy means you walked away from everybody. If it's a straight Chapter 7, you know, in America, they don't have debtors' prisons now. If you were in London and England, well, you know, the English were into putting people into jail if they couldn't pay their creditors. But in the United States, we have a more gentile way of doing things known as bankruptcy. You can actually walk away from all your creditors and fresh start. I didn't say without consequences, because there are always consequences when you stick it to the people that gave you money. And that may be you can't get best interest rates because you're considered a poor risk because you walked away from your debt. But many times bankruptcy makes totally good sense. Rich people do it all the time. They create new companies and they get on with their business. And it's business. But for the average consumer, bankruptcy can be a real hard place to be. But you know what? They got so much going on out here today. If you file bankruptcy, you can still buy a car as long as you got a job and pay stuff. You'll pay credit card rates, but you pay as agreed for, you know, a couple of years and gag, and then you can refinance because you're gonna have to ask them, can you give me a better rate because I paid on time? And sometimes they will, sometimes they won't. Foreclosure. After 2008, a lot of people lost homes. In America, it was an epidemic. But foreclosure is a biggie because foreclosure says you didn't pay your mortgage. You can say, but the rate was outrageous. And they will say, but you signed the contract. Was there a knife in your back when the contract was presented to you? But I needed the money. I need it. Come on. Foreclosure is bad news. Can you come back? It's going to be a slow process, but you can come back, and it is a red flag. It's on your credit report. It is a red flag. You can offer to settle. You can offer a deed in lieu of. There are options, but foreclosure is still a red flag. Okay? Child support. Oh, yes. It's on your credit report now. If you don't pay your child support, men, and some of you women, but you got to pay your child support because the federal government is involved now. And child support will put you in jail. For real. People do go to jail for that stuff. So banks don't like risk, remember? They don't like risk. And at the point you may be in jail and owing them money, like, I don't think so. Repossession. When you've had a car and your car's been repossessed because you didn't make payments, that means you stuck it to another creditor. Remember I told you it's a family? The credit industry's a family. They're like, oh, he stuck it to him, he'll probably stick it to me. And then using too much credit, which is some of you guys and gals, or should I say gals and guys, need to cut that stuff up and quit. You need to put yourself on a self-discipline mindset and determine that I'm not going to do credit. Okay? I personally don't do credit. That's me. Because I don't like to pay interest. I'm frugal. Really. I don't want to pay. I can use the money that I spent on interest to do some things for me. Now let's talk about why good credit, if we'll go to the next slide, why good credit is essential. The better your credit, the lower your interest rate. If you're in a bind and you need to advance on your credit card, and you have good credit, you will find the terms are very important. And credit for people with good credit is pretty cheap. Good credit will lower stress. Why? Because juggling a bunch of credit cards is just a bad way to try to live your life. I'm serious. It's stressful. Insurance policies. Did you know insurance companies run credit reports now? Yeah, along with your medical information. They do that too to find out if you're dead or not. But if you have bad credit, and I mean, this is convoluted, but I'm just going to be straight with you. Because when they started doing it years ago, I was like, whoa. Because you all know I do insurance and do a lot of things related to insurance, including life insurance. And people are like, I had a carrier tell me, this young man has all kinds of parking tickets and speeding tickets, and we don't want to issue him contract. And I was like, he's 21. And they're like, yeah, but he runs tickets and his credit's not good. And I'm telling you, it's crazy out here. And yes, they do run your credit report. Also, your driver's record. I mean, you're like, do I have any privacy? No, you don't. Okay? No, you don't. If you don't have good lending, a good credit, you're going to be subject to predatory points of business and being ripped off. Okay? I'm not saying that people with good credit don't get ripped off, but I am telling you that people that don't have good credit are going to be in the market for help, and that the sharks are waiting, the wolves are on the sideline. If you want to buy a home, good credit's essential because interest rates are determined by your payment history, your credit history. Now, there was a time and season where people with bad credit could buy homes through Wall Street, through lenders, subprime. We call it below prime. That's over. We got to come to the market with some serious, good payment history, serious work history. Again, banks are not in the business of being left hanging. Okay? If anybody's going to have a noose with a neck around it, it's going to be them, and it's going to be you. And finally, at some point in your life, you may want to start a business. And I'm only saying to you that if you choose to start a business and you need to go to the bank, you daggone better have good credit. And they're going to want collateral. They're going to want a lien on your home. They're going to want to take money. They just are, because the failure rate among businesses is quite high. And again, banks don't like to take risks. So if they have your house, they figure you'll be more inclined to repay their loan. And you're going to be open to that because you need the money to grow your business and fulfill your dreams. I mean, why be in business if you can't make money? But these are the rules. Let me just do a quick case study. And if we'll go to the next screen. And this is a situation when I share with people that come to me as a part of their pre-retirement. And I look at their profile and I look at how long they've worked and the jobs they've had. And the main reason I found that people don't have much money at retirement has nothing to do with them working. That's not the way the system works. It's not the money you make, it's how you leverage the money you make. So if you're paying high rate interest on everything you have, that's money going to somebody else. It may hit you, but it's gone to somebody else, the bank. The case study was a $200,000 home. It was a 30-year mortgage. The difference between interest rates, one was a 6.25 versus a 4.25. Over 30 years, it would cost that person over $89,000. Whew! $89,000. And of course, don't get into refinancing. Because people say, I got a lower rate. Really? Okay. Well, I'm going to tell you what. You need to do the math. If you're going to refinance, you refinance to a shorter payoff period with a better rate, and you may do better. But refinancing under the same length or renewing it and making it longer, so you're stuck with a mortgage in your 60s. And they're just continuing, oh, this is a great thing for you. What do you want them to tell you, folks? That that's a dumb move? And are you smoking something funny? They're not going to say that. They're going to say, this is just for you. This works for you. Sign. And you're like, I'm signing because this is great. How many people, I could write a book on this. The people I've tried to tell them, do not do this. Just stay disciplined. Your house will be paid off in 10 years. You're now into principal. And they will flip that house. Oh, I need the money. And I need to lower my payments. And again, it's over. Ball game. Another one bites the dust. Interest rates are major. And that's how banks make their money. Remember the spread? Now I'm going to shift to credit. And you need to know there are 4 credit reporting agencies, if we can go to the next slide. There's Equifax, Experian, Inovis, and TransUnion. These agencies keep track of your life as it pertains to credit and employment and debt utilization. They're the one, and they rate you. There's a scoring system called FICO. And you need to know that. You need to know how you stand against everyone else. And you might be surprised that this scoring system may keep you from renting a car. Did you know that? That many car companies today are not willing to lend you their car if you have a bad credit rating, okay? A bad credit score. And usually it's 650 or below. And they'll say, you know, we're really sorry, but you're not going to be able to rent one of our cars because you may not return it. You're like, I just need a car. Then drive your own, because we're not willing to take the risk of using your credit card or debit card to do anything. Same thing with hotels. Hotels will tell you, you can hold the hotel room. And you will say, okay, I'll give you my card, and then you may get a call back. I'm telling you, which is, we're really sorry, but we don't think so. You're like, what? I can't even rent a room. And they're like, well, your score suggests that you might tear up the room. So you say, how do you extrapolate from a score that I'm going to have this kind of behavior? Well, folks, I'm not a psychologist, and I'm not a criminal master. I don't know these things, but I will simply say to you that there is a prevailing and emerging mind speak that people that don't have good credit are not trustworthy, and that comes out of the banking industry, which says if you don't have good credit, you're not trustworthy. You can't rent a car, you can't stay in a hotel, you can't, you can't pay for flight tickets. Oh, right. Deep. But here we are. Now, you are entitled to, and I encourage you to get your free credit report, which by law you can get one time a year by going to www.annualcreditreport.com. That's the only website you go to. Do not go to anybody else's website. I'm telling you, this is the only federally authorized credit accessing website where you can get your credit report from the 3 major players, Equifax, Experian, and TransUnion. They do not give you a credit score, okay? But you can get a free credit report anytime you've been denied credit, job, or insurance in the last 60 days. They'll send you a letter. You can go in and you can find out what they said about you, what they reported on you. Now, trying to clean up your credit is a muddy thing. As I tell folks, don't get into trouble to begin with, because it takes time. Can credit be improved? Sure it can. Absolutely. Time will clean up anything, and a good payment history will clean up anything. But it's not a fast, quick fix where I need to have good credit because I need to buy a house. No, that's not the way it goes. Erroneous information must by law be removed by the credit agencies. That's a law. If it's erroneous, it has to go. You can do that on your own. Whether you'll be effective or as effective as a credit improvement company is debatable. But I will say to you that there are options. You need to know what your credit looks like. You also need to know who's been looking at your credit. That's illuminating to find out who's been looking at it. And finally, you're allowed to get your credit report if you have been the victim of identity fraud, which is epidemic in this country. And globally, they tapping into your stuff every time you're on the internet, trying to figure out if you got something they can take. I'm serious. People are hungry in other parts of the world, and they feel that we're the fat pig, and here they come. Let's move on. There are 4 types of loans. Installment, which is a monthly contract, whether it be for a car loan or for business loan. You have revolving credit, which would be your credit cards, etc. The balances change every month. The interest rates change as well, depending upon the terms of the agreement. There's unsecured loans, which do not require collateral. And then there's secured loans, which require collateral. You can have a car loan that is an installment loan, meaning monthly payment, but it's secured. The bank has title to your car till it's paid off. Same thing with your home. Let me say something to you. Please stop telling people you own your home unless it's paid off, because until your home is paid off, guess who owns the home? The bank. And if you think I'm kidding, don't die with a mortgage, because the bank will come wanting the home to settle up. And the kids say, but the will said it goes to me. The will does not go to you. Banking dues. Time's wrapping up. I need you to make informed decisions. I need you to manage your credit as the best you can. I need you to have a system to keep track of all of your purchases. I need you to know the difference between ledger and available balance. Okay, what's on the books is not necessarily what's available, because cleared items may not be showing yet. You need to know what services you're using and what you're charging for. You need to know these things. You do need to take advantage of the annual credit report. You need to report identity theft immediately. And if your kids are sticking you, you need to be prepared to prosecute them, because I'm telling you now, if your kids are using your identity and you don't know about it, you're going to be stuck with the tab unless you are willing to initiate criminal proceedings against them, which is a sorrowful thing. Banking do-nots. As I conclude today's segment of Power of Money, and today is about the power of banking. Do not co-sign on a loan to someone you're not married to. Really? You love them like that? Don't fall for lottery schemes or accept checks from people that you don't know. These should be intuitive, but I'm telling you, people do it all the time. Don't write checks when you don't have money. Writing a bad check is criminal. It's criminal, and they prosecute. Yes, they do. You want a check writing game on your credit report, and you want to do time for bad checks? Really? Don't give your PIN, that's your personal ID number, to anyone. Don't deposit money in an ATM machine that you need right away. Take it right to the teller. An ATM machine may take 24 to 48 hours to process that check, and then you're stuck. Do not use the ATM to check your balance. If you want to know what's on your balance, go online or go to the teller and find out for yourself. Do not abuse payday loan services and car title. I know people that are drowning from payday loans. It's criminal. It's bigger than the mafia, serious. And people get involved, and they don't understand that you are never going to win in a payday loan scenario. It's not designed. The fees, the interest rate calculations, unless you are a banking wizard, you're going down. Finally, and most important, do not love other people and institutions more than you love yourself. And begin to handle your business in a way that says that I am important and I am significant and my welfare trumps everybody and everything else, which means that I'm going to be responsible, I'm going to be accountable, and I am going to live life empowered to prosper, forward-thinking, enjoying the blessings of living in a free society called the United States of America. where I have the freedom and liberty to order my steps and to prosper. On that note, thank you for being a part of my world today. On The Power of Banking, I'm Michelle Graves. Check my YouTube, youtube.com/The Power of Money. If you'd like to look at more informative information that's been broadcast on this station. And again, I thank you for your support, your patronage, and most of all, for your love. You take care, and as always, God bless you, and I'll see you next time. You take care.